Hi, welcome. I am SDK, and this is a new series called Learn with SDK. Today we'll be talking about fundamental analysis of stock, and I will be going through 3 real-life examples. I've been investing in the stock market since 2020 and have had considerable gains in the market. Today we'll be looking at real-life examples of 3 companies, analyzing their financial statements, and I'll be walking you through the process of how I do my fundamental analysis of the stock market. Let's not waste any more time and let's get straight into it. If you're a beginner and if you don't understand the terms that we'll be talking about, I'll make a separate video on that. So comment below if you want a separate video on the terms that we'll be talking about, the words that I'll be using. In this video, it will be purely analyzing 3 real-life examples and showing you how I do my way. It's my way of fundamental analysis of a company. So what is fundamental analysis of a company? It's essentially looking for various different companies, various different stocks in the market, and researching about their financials, economic, and how they're going to do, and projecting how they will be doing in the future to get better returns. I would highly suggest you to watch the entire video. It's going to be very brief. Let's start right now. We'll be starting with 3 examples. First will be a good financial statement, a good example of what a good financial statement looks like. I'll be showing you a second example of a company which is not so good, and a third example of a company that's average and perhaps not so good as well. So 1 good and 2 bad examples essentially. So I have taken Tesla for the first example. Let's go to Tesla trading view and go to statements. When you go to statements, scroll below and you see 3 financial statements here: income statement, balance sheet, cash flow. I would look at annually and quarterly. So the first metric I would look at is the total revenue. I would see annual. First, I would put it at annual and go to total metric and look at the annual revenue year over year. If there is a good increase in revenue year over year, it means that the company is growing steadily, which is a good sign. So here you see 24 billion, 31 billion, 53 billion, 81 billion, 96 billion, and TTM is trailing 12 months. So it is already at 96 billion, which is a good sign. So you want, whenever you're analyzing a company, you want the revenue to be growing at a good pace, and this is a great pace. Next metric would be gross profit. It's at 4, 6, 13, 20, 17. So the company is profitable essentially. So this is a great sign as well. Operating income is good as well. It's increasing, it's positive, which means they're making money. Pre-tax income, same, they're making money here. They were losing money here, but they have recovered, which is a good sign. Net income, that's a good sign. And EBITDA is a good sign. So I essentially look at total revenue, gross profit, operating income, pre-tax income, net income, and EBITDA. These metrics are extremely difficult to fake. So you know the company is doing well when they put out these metrics. So the next one is balance sheet. We look at total assets and total liabilities. Here we must make sure the total assets is greater than the total liabilities. We can see that the assets is 106 billion and the total liabilities is 43 billion, which is excellent. If the company, God forbid, if the company ever goes bankrupt, they'll make sure that all of their assets are converted into cash, and all the debt can be paid off to everyone. Essentially, insolvency won't be a reason to to lose your money, essentially. So that's the reason we make sure the total assets is always greater than the total liabilities. So that's what I look at in the balance sheet. It's very simple. And the next one is cash flow. Here, I look at only one metric, which is free cash flow, baby. Free cash flow. That's what you need. Free cash flow is how much money is left over after everything, after all the expenses, after paying off all your employees, taxes, everything. What is the money that's left over? And again, if you want a separate video for just defining these terms, we can make a separate video. But this is fundamental analysis under 10 minutes. So we'll keep it that way. Free cash flow here is positive, which is a great sign. Again, 900 million, 2 billion, 4 billion, 7 billion, 4 billion, which is a great sign. It's increasing. So Tesla is a buy. It's a strong buy. And right now it's at 191. Today is February 24th, which is a Saturday. So right now it's 191, and I would say this is a buy. So this is just the financial part. You can also look at the other factors, but all of these are other analysts. They put their own estimates of the forecast, and it's not always accurate. So I would not suggest you to do that. My way is looking at the financials, looking at the leader, Elon Reeve Musk. So I would look at the leaders, I would look at the board of directors, I would look at the financials, and I would look at I would look at the historical charts here. I would look at 5 years, 1 year, and make sure I buy it at a dip. Yeah. So 191, I would suggest you wait until it dips to 170 or under 180. That's a good buy. 190 is probably a good buy if you want to hold for 5 or 10 years. Okay, moving on to the next one is Luminar. Luminar Technologies is not so good buy, and here's why. Like we did before, we go to income statement under statements and under financials on TradingView, and you go to LAZR. So you can see the revenue is increasing. It's increasing at a steady pace, which is a good sign. And I think that's the only good sign here. But later, when you see at gross profit, they're losing a lot of money, 60 million, and they are earning 40 million. So it's definitely not a good sign. Operating income is not so great either. Pre-tax income, they're losing money. It's all negative. Net income negative. EBITDA is negative. So that is not a good sign. Balance sheet, total assets over here. Total assets is lesser than total liability. So they have more liability, negative assets. So this is definitely not a good sign. Let's go to cash flow. Cash flow is negative. So they're essentially losing a hell lot of money. They're losing $250 million over here, 223 million minus negative. So I would not buy Luminar Technologies. And there could be some exceptions in life. It could be a startup. It could be, growing. And you have to look at the team, etc. But in this case, I don't think Luminar is a good buy. Let's move on to McDonald's. McDonald's is, you can decide. I'll let you, and why don't you comment on this video and let me know if McDonald's is a good buy or not. Let's go through the financials. Income statement, the revenue is increasing at a very steady pace, at a very slow pace. They're profitable, so gross profit is positive, it's increasing. Let's go to annual, and operating income is increasing, pre-tax income is increasing, net income is good, it's positive. Let's go to balance sheet. Here you see that the total assets, the 2023 one is 56 billion and total liabilities is 60 billion, which essentially means if they ever go bankrupt, they will not be able to pay off all the debts. And that'll be a huge issue. The company will go insolvent and someone has to save them. I'm not saying that will happen, but it's always nice to have more assets than liabilities, even in life. So 60 billion is assets, 60 billion is liabilities, and 56 billion is assets. Here you see the free cash flow is good as well. It's okay. It's 5 billion, 4 billion, it dipped, 7 billion, 5 billion, 7 billion. So it's growing at a very slow pace. The only issue I see here is the assets is lesser than the liabilities. So let me know in the comment section below if this MCD, McDonald's Corporation, is a buy or not. And that's about it. That's fundamental analysis, hopefully under 10 minutes. I'm not sure, maybe 12 minutes, but I hope you got the gist of how I do my fundamental analysis, looking at the financial statements and then buying. Also, another tip from me would be is to have a diversified portfolio. Always buy, always make sure your portfolio is diversified into various different industries. That's always a good sign, and in the long run you will make a hell lot of money. That's about it. If you like this video, make sure you like it and subscribe. And yeah, we are at 600 subscribers. Let's grow this to 1,000 subscribers. Come on guys, it's honestly getting embarrassing right now. We need to get to 1,000 subscribers, and cheers, have a good day.